Hi there, welcome to Kneppy Invest. Continuing on looking at companies that did release pretty good financial year 22 results, I'm going to be focusing on a company I haven't featured in any of my videos before, and that is Kelly Partners Group Holdings. This is a unique company. First time I did a little bit of research on Kelly Partners was back in 2017 or 18. Share price was about 70 cents at that point in time. Wasn't really certain or sure about their business model because they do have a fairly unique business model. And to be honest with you, I'm not that enamored in these type of companies. And when I'm talking about these type of companies, I'm talking about those sort of companies that their success is all about the individual, say, and it's professional individuals, say lawyer firms, accounting firms, which Kelly Partners is, those sort of firms which are reliant on those professional people. And I'm not sure why those sort of companies haven't been that successful as a publicly listed company. And we have seen some of those type of companies having problem on the ASX. Hello, Slater and Gordon. But when I did look at the Kelly Partners Group Holdings business model, and their model is fairly unique, they call it the partner, owner, driver. So that means they acquire a majority interest in a company, so a greater than 50%, so not 100%. And if you look at the shares on issue, even though this company has been acquiring a lot of other accounting firms, shares on issue in this company are flat. Now, because they don't have 100% interest in a company, only greater than 50%, that means not all the profit of these accounting firms that they do acquire goes to the bottom line of Kelly Partners. So I wasn't quite certain how this business model would, how it would be successful in the long run. Now, in saying that, I won't say I was wrong, but this model for Kelly Partners Group has been highly successful over the past few years. We have seen the share price go from, when I looked at it 3 or 4 years ago, it was about 70 cents, all the way up to above $5. So this has been a significant wealth winner for those shareholders who believed in this model. Now, before we go on to looking at Kelly Partners' financial year 22 results, just a bit of outlook to what companies I will be featuring in future videos pertaining to their financial year 22 results. If you want me to look at a company that you're interested in, leave it in the comment section of this video. So some of the companies I will be looking at over the next, say, 2 to 3 weeks include Xtech, Enero, CSL, Data3, and Lindsay Australia. Now, before I move any further in looking at Kelly Partners' financial year 22 results, how would I define Kelly Partners Group Holdings as? Is it a high-quality company or a low-quality company? Now, if you asked me about 3 or 4 years ago, I might have been more trending towards a low-quality company. Now, I think it's more towards the higher quality side of the spectrum. And that means when it comes to Kelly Partners, it's all about the valuation of the company right now. So I will be looking at the valuation closely. And when it comes to the charts, I'll be paying less attention to the charts. So if I do see Kelly Partners share price drop, say 50 to 60%, maybe that could be a good time to take a position in this company, because I do think this is sort of going against my belief about 3 or 4 years ago that these sort of companies are not investable companies. I think that Kelly Partners Group Holdings is potentially a good long-term hold. And as we do have a look at the long-term chart for Kelly Partners, ever since they listed on the ASX way back in 2017, even though I was not enamored with this company and their business model, in fact, to be honest with you, the market wasn't really either. For the first about 3 years, they were on the ASX. In fact, the share price had been drifting down. But all of a sudden, midway through 2020, the market started to become enamored with this company. And thus, the share price rose from a low of about 60 cents to a high of $5.40. So not quite a 10-bagger yet, but from the low to the high, it is a 9-bagger. And I'll have a look at the daily chart later in the video. And if I was just using technicals, the share price is really struggling getting above $5.40. So we have seen the share price sort of consolidate at that level for a period of time towards the start of this year. And again, over the past month or so, share price is really struggling to get higher from where it is right now. Now to some of the financial year 22 results for Kelly Partners. Share price is $5.05 when I set up this video, which gives Kelly Partners a markup of 227 million. So just imagine a few years ago when the share price was about 60 cents, that meant the markup of this company was about 40 to 50 million. So we have really seen this company grow in terms of valuation over the last 2 years. Now, financial year 22 revenue, 67.4 million, profit 5.6 million, and that is a profit to the parent company, not to the non-controlling interest. So again, when they acquire companies, they don't acquire 100% of those companies, it's only greater than 50%. So some of the profit those acquired companies make go to the parent company, but they also remain in those individual entities. The financial year 22 operating cash flow is 7.3 million. Now, to get that number, and I don't think that number would be reported by the company or any websites. And the reason I get 7.3 million for operating cash flow is because I minus leases and the dividend to non-controlling interest. We'll have a look at the cash flow statement later in the video, so you can just see the difference between the cash flow or the operating cash flow company has reported and my own operating cash flow that I have calculated for this company, and it's much more in line with the profit for the company. And the earnings per share is 12.36 cents. Now on to revenue and operating margins for Kelly Partners, and this goes back to 2013. Now, Kelly Partners has been around for about 15 years, if I remember correctly, and because they are acquiring businesses, we should see revenue growing through time. Because if they were acquiring businesses and revenue wasn't growing through time, that would be a major concern. So in the next slide, I'm going to show you how much of this growth in revenue is because of organic growth and how much of it is because of acquisitions. That's really important. But the main story here is revenue is growing over time for Kelly Partners. It's grown from $13 million in 2013 to $64.9 million in 2022. And the other thing is operating margins have been growing as well, increasing from about 22% to 26%. Now, you can see operating margins are a bit more up and down like a roller coaster. That's okay. That's even okay with revenue if there's a little bit of lumpiness. But overall, I want to see an upwards trend in revenue, and we definitely have that for Kelly Partners. If we calculate the growth in revenue per share, we get 19.5% over the past 9 years, 16.5% over the past 5 years, and 17.5% over the past 3 years. So again, that's actually fairly reliable and consistent growth in revenue. And the reason I'm not going back 10 years is I don't have data for 2012. They became a listed company in 2017, and I was only able to get via ticker data to 2013. So let's have a look at how the company is growing organically and through acquisitions. And I'm really happy that Kelly Partners included this sort of information in their presentation, because whenever I know a company is highly acquisitive, I need to know how much of their growth is because of those acquisitions and how much of it is organic growth. And they've provided this information for the last 5 years. For instance, in financial year 2018, 13% of their growth was organic, 17% of their growth was through acquisitions. In 2019, in fact, their organic growth was negative 4.6%, and acquisition growth was 6.4%. But in financial year 22, organic growth was 6.2%, and acquisition growth was 26.5%. And on average, this company is achieving growth, organic growth, of 5.1% per year, and growth through acquisitions of 12.3%. So you could just see how powerful and how much of the growth of this company is through acquisitions. If this company wasn't acquiring other companies, they still would be growing, but significantly less growth than what we're seeing now because of those acquisitions. Now onto the cash flow statement. And remember, my cash flow or operating cash flow was just over $7 million, but the company is reporting cash flow or operating cash flow of 17.6 million, increasing from last year. Last year was 15.1 million. So how did I get from 17.6 million to just over 7 million? A couple of things here, and the two things I'm really focusing on here are in the financing activities section. And those two things are distributions paid to non-controlling interests of 6.9 million. So those are those companies, those acquisitions they have made over the past few years. They have not acquired 100% of those businesses, and they have to give those businesses a bit of their profits And that's what that distributions paid to non-controlling interests are. And the other one was repayment of lease liabilities, 3.4 million. Lease liabilities are an ongoing cost for all companies that rent out any sort of office space. And I believe lease liabilities or repayment of rent belongs in operating activities, because a company, particularly if they do run their business out of offices, have to pay rent unless they own the building, of course. So I like to take lease liabilities away from their operating cash flow, simply because I do believe, in my opinion, it is a part of operating activities. So that's how I get $7 million when I look or calculate operating cash flow for Kelly Partners. Now, if you calculate free cash flow using my definition, you take away $6.8 million, which is the payments for property, plant, and equipment, which is capital expenditure, which means the free cash flow of this company is actually fairly low over the past year. Onto another slide I really like in the company's presentation, and this is looking at the company's net or change in net cash, working the way backwards from operating cash flow, because a company doesn't have much of a change in net cash. So in fact, in financial year 22, the change in net cash was only $200,000. In financial year 21, it was in fact negative $400,000. So how do we go from an operating cash flow of 14.3 million in financial year 22 to only a change in net cash of 200,000? So let's work our way back through this. So typically, when you go from operating cash flow to free cash flow, and they've called this free cash flow to the firm, you typically minus capital expenditure. They've only taken away maintenance capital expenditure and scheduled debt reductions, but they've calculated free cash flow by not including growth capital expenditure. I prefer to include growth capital expenditure when I'm calculating free cash flow. If I do that, we get free cash flow of 3.1 million. Now, net debt drawn, 23.4 million. Acquisitions, minus 12.5 million. They've also taken away the distributions to minorities of 5.9 million. Additional debt repayments, dividends to shareholders, net paid partner loans advanced. So all these very little amounts down here, all the way down to deposits of negative $100,000. So a lot going on here for Kelly Partners. But the main thing is you do have to take into account capital expenditure or growth capital expenditure when you're calculating free cash flow. In my opinion, you've also got to take into account the distributions to minorities. This is an ongoing thing, because when this company acquires other companies, they're not acquiring 100% of those companies. And when I first researched this company, I was wondering why or how shares on issue is not increasing. And that's the way shares on issue are not increasing. So the majority of companies, when they do acquire companies, they're either going to have to increase their debt. It does look like there is potential that Kelly Partners is increasing debt with acquisitions for acquisitions. But the other way companies can acquire other companies is not only by going into higher debt, but also by increasing shares on issue to bringing in more cash into the company. Kelly Partners isn't doing that. Shares on issue is flat at this point in time. Now to another slide the company did have in their presentation, and I love this slide because we know that Kelly Partners' share price has grown considerably since the company did IPO 5 years ago. In this slide alone, we can determine whether the company's growth in their share price is just solely through financial expansion, or if it's a combination of financial expansion and multiple expansion. And multiple expansion is just an increasing P ratio. So the way you look at, or I look at multiple expansion, is whether the market is willing to pay more of a premium for a company. And through this chart, we can see that there is a lot of multiple expansion happening for Kelly Partners. And the reason we know that is that the share price and the market cap of this company has been growing over the past 5 years at 33.4% per year. If we look at the growth of other financial metrics in this particular slide, for instance, revenue has been growing at 16.5% per year, EBITDA at 18% per year, underlying profit at 12.8% per year, operating cash flow at 21.3%, and earnings per share at 13.1%. All those financial metrics growth are considerably lower than the growth in share price. So we know there is financial expansion happening, the growth in profit, operating cash flow, earnings per share, but there's also been a significant amount of multiple expansion for this company over the past 5 years. So the market is willing to pay more of a premium right now for Kelly Partners, and that will become even more evident when we look at the valuation metrics later in this video. Now, Kelly Partners they do have a plan. This is the 5-year plan from financial year 2019 to financial year 24. I love when companies provide these sort of plans, particularly longer term plans. I love 5-year plans. So a few companies do provide this. And one of those companies that has been very successful in doing this is Altium, and they've continued producing or giving the market their 5-year plans. Last time Altium did this, they were not successful in reaching their 5-year plans, but it gives the market an idea about expectations that management have for future growth in the company. So this was their 5-year plan going back to financial year 2019. They wanted revenue to grow from $30 million to $80 million. And they wanted EBITDA to grow from 8.7 million to 28 million, and profits to grow from 3.4 million to $8 million. And at this point in time, they're well on their way to achieving their goals for financial year 24. Now on to the valuation for Kelly Partners, looking at PE ratio, price of sales, which I don't really care for a company like Kelly Partners, as price to operating cash flow. We also look at the reverse DCF, what the growth needs to be for this company to justify the current valuation. Now, I was a little bit surprised that the PE ratio for this company is at 40.8. That does seem excessively high, but again, the market is willing to pay a premium for this company. Another unique thing about Kelly Partners is the amount of times they issue dividends to their shareholders. Seems like it's every single month. Might not be every single month, but it seems like it. So that is a very unique dividend payment program. I don't think there's any other company on the ASX that do that. So that is something that might be attractive to those income seekers out there in the equity market of Australia. Price to sales ratio 3.4, price to operating cash flow 31.1. That also seems excessively high. But if we look or calculate the reverse DCF using earnings per share, this company has to grow their earnings per share at 23% per year to justify the current valuation. Now, unfortunately, the company hasn't been growing at that rate over the past 5 years since they IPO'd. Doesn't mean they won't grow. So at this point in time, there is a possibility that the market is paying a little bit too much of a premium for Kelly Partners right now. And I think it could be understandable, because I think this business model they do have, this partner, owner, driver model, is being successful. There is some pretty good growth in this company using this model, and I think the market is expecting this model to be successful over the next 5 to 10 years, and this company to be significantly more valuable in the next 5 to 10 years. So the market is excited about this company, but I would probably just be wary just because of the valuations right now. And remember, because I do think Kelly Partners is more towards a high quality spectrum than a low quality spectrum, valuation is more important. So if I do see a significant pullback in the share price, this could be a company I would consider taking a position in for the long term. So even though I'm more interested in the valuation or the current valuation of the company right now, I'll always have a look at the chart. You can just see, and this chart actually is the daily chart going back to the end of 2020, and you can see a well-defined, beautiful uptrend from November 2020 all the way through to the beginning of 2022. Share price increased from $1.60 all the way to a high of $5.40. But you can see the share price of Kelly Partners is really struggling to get above $5.40. We saw the share price just consolidate and go sideways from January through to about April or May of this year. Then the share price pulled back, share price recovered back up to $5.20, but has been going sideways over the past month and a half. If I was a trader and I was just using technical signals for Kelly Partners, if the share price went above $5.40, which is a pretty strong resistance level right now, that could be a buy-in price moving forward, because that would be a breakout in the share price. And if I saw a breakout in the share price above $5.40 on high volume, particularly if I was on the back of some good financial positive news from the company, that could be a good short to medium term trade. That's all I have for looking at Kelly Partners Group Holdings financial year 22 results. If you have any questions, thoughts, opinions, leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.